Good. Well, good morning, everybody. It's Matthew here, live data sheet review on the 3rd of the 10th, 2015. And good morning, Peter.
Good morning, Matt, once again, and good morning to all our faithful attendees.
Yes, indeed. Well, actually, I think in New Zealand, they've kicked over into daylight savings time, so it's probably a good afternoon. Yes. But nevertheless, yes, a good day to everybody. So what we're going to talk about today is, as per usual, going through some selected races and days from the last couple of weeks, just to shine a light on some learning opportunities that we always try to do here in these sessions. My job, as always, is to curate the questions. So if you can find the question box, find the chat box, or send me an email, I'd be more than happy to answer them and interrupt Peter to make sure your learning is expanded on. If you've got any comments you'd like to make, or would like to agree with us or disagree with us on anything, put it in there, because this is actually not TV. This is a live show, and if you want to actually have something repeated, or you want to share an idea with the group, please do that. And I, as always, Chris does that, and so does Malcolm and George when he's available and things like that. So the idea of this is to be an interactive session. A bit of housekeeping first of all. Some of you may have got an email from the TAB about RapidBet being discontinued. Don't stress about that. We actually got I got an email a couple of months ago from the TAB telling them that they're going to be offering a data service. I phoned them up, and when I got through to the appropriate person with that, I said, "Oh, hello, my name's Matthew. I'm calling about the email." He goes, "Oh, are you from Trilogics and IQ Pro?" And I said, "Oh, have you got my number on your phone there to identify me?" He says, "Oh no, we sent you the email first." And so throughout the last couple of months, we've been treated with a great level of respect for the amount of money that we put through the TAB and the customer group that we have. We've already received what the industry called an API, which is a way to actually speak with their servers. And the TAB are working to put together a service similar to Better Data and commercialize it. So they are going to be providing a better service for our customers. And so throughout the next couple of months, we'll be in conversation with them about how you, as our customers, can be better served by their data feed and things like that. And also Better Data, the company itself, or Subscription Data, who provide Better Data, they have been notified by the TAB that things are changing, which means that you will either receive a notification that their agreement is going to stop, and that means you'll get a refund for any monies paid, or their agreement will continue. So it's a really exciting time. We are, for the first time in 20 years, being treated with the respect we deserve as a consumer group of the TAB's data, and the TAB, because we serve up, a couple of customers a month to the TAB. And also we've got some very high turnover customers on the line, like I'm seeing here. So Brian's just asking, are the TAB going to charge for this service? More than likely, Brian. They're looking to commercialize it, and that usually means make money out of. So yeah, I would say that's their plan. So I'm obviously going to be pushing for the lowest charge possible. And of course their business model is going to be to try to charge the highest amount, and somewhere in between there will be a number that will do that. But of course that will give us service level agreements that will be enforceable, because anybody on RapidBet knows that RapidBet as a data service is not as good as Better Data, and that's why we recommend Better Data. Of course, when they go ahead and start commercializing it, they're going to have to agree and provide a level of service, far and beyond what they currently do. So really exciting times. Very good as a company to be recognized by the TAB as a substantial user group, and very good that we're actually been in conversations with them to, help you guys become more successful, because the more data, the more timely the data, and the better our connection with the TAB, overall we're all just going to grow and make more money in the long term. So look, Peter, that was just a few people have received emails, a bunch of tickets have gone in. Just wanted to let everybody know about that, it's actually really positive stuff that's going on. All right, Pete, well, look, if there's no other questions about that, and really there's nothing more to say other than we know and we're working on it, I'll pass it over to you, mate.
Thanks, Matt. All right, well, today we're going to be reviewing a Saturday of selections, and further to our conversations of the last few webinars about taking responsibility for the profit and loss situation and progress on any given day, I'd like to discuss, given that it's over here in Australia, it's grand final weekend, so there's a wealth of football on, AFL, NRL. There's going to be the Wallabies playing in the World Cup, and oh yeah, it's all happening here. But I think it's probably opposite that, given that there are football grand finals, that we use the footballing analogy. And one of the mantras of, I suppose, most coaches of successful football teams is the need for the side to get away to a great start. If they can get away to a great start, a very good side is very hard to beat if they get a roll on early.
Yeah, true.
And they get the jump on their opposition. Sometimes good sides that are slow to get started can recover against lesser teams, but against a very, very good team, which you would encounter in a grand final, if you give a very good team a head start, you're going to find it's very, very very difficult to pull them in and rein them in. And I suppose that carries over to this a little bit, because I suppose we all want to sort of get a positive start with this. You know, as I've said before, none of us are really punters in the sense that we love the thrill of the punt and I love the thrill of the bet. We're in this to make supplementary income, and the quicker we can do it on any given day to our satisfaction, the better it is. So I think you owe it to yourself to, when you start trading, make the first one count, in the sense that you want to feel that, hey, this is one that's worthy of my money. If there's any shadow of a doubt, you're far better off just to let it go by. So if you're sort of at 6s and 7s and you think, oh, well, yeah, okay, well, I could do it, but I don't know, and, you know, I'm not sure, but I will, because the program's sort of telling me that I can do it, then that's probably not the way to go. The best, you want to do all the analysis, look at all the indicators, and weighing them all up and giving balance to all of them, then make a confident decision either way. And the good example here is the first trading opportunity on this particular Saturday. Now, as you can see, it's a pretty straightforward at the 1 minute mark. I mean, it's just essentially the top 3 runners for first, the top 3 runners for second, and coming down to number 8, making a percentage allowance. And that pretty much accommodates the prevailing money profile at the 1 minute mark. If we go over to percentage return, you can see that the indicators here, the separators here, very much are in sync with the money gaps that present in trifecta mode. But the interesting thing that makes this a very worthy trading opportunity right from the word go is the stability of the situation leading up to that 1 minute mark. If you notice, the money gaps that we're working with, and indeed are going to be our prevailing defaulters at the or defaulting points at the 1 minute mark, haven't shifted. They've been stable right from an earlier interval, and that's a good sign. and particularly when you can see it quite clearly represented in the money. I mean, the very strong money is for these top 3 runners here, all the way along, and essentially the bulk of the money is held by the runners down to runner 8. So that sort of defines a good, solid, dependable opening trading gambit, if you like, and so that's, you know, that I think that that's a very worthwhile strategy to employ. If you don't feel 100% confident in what in the trade you're going to make, then don't do it, because there's going to be plenty more races. And let's face it, if you can get away to a good start and make a good profit, build a good profit to your satisfaction early, then it's an early day at the office. And so that's the name of the game, I would suggest. So, you know, there's our opening trading opportunity. Now I'm going to contrast it with a similar opportunity a little bit down the track here. So let's go to the next trading opportunity. And incidentally, you can see that this was a winning opportunity. I mean, 4, 2 and 1. So there it is, 4, 2 and 1. Not surprising in getting first and second from that top group of runners. Okay. Moving to the next one. Once again, pretty straight up and down, as you can see. I mean, it's just basic money gap selections. Top 2 runners first, down to runners 4 for second, and down to the money gap for at number 2 for third, giving us 30 combinations. If we go to percentage return, once again, the separators in percentage return are in sync with the money gaps in trifecta. So that's a sort of endorsement of the worthiness of the trading opportunity. Okay, now we go to the next one, which is this one. Now you can see it's reasonably similar in appearance to the first trading opportunity. You can see the very solid money here for the top 3 runners at the 1 minute mark and a large money gap. But the difference is when we, in the lead up intervals, unlike the first one where the money gaps were stable, here at the 2 minute mark we have no trade on. You know, it's a no trade at this situation because there is no money gap to work with. And you can see the difference here, and if I go back one more, we have a money gap sitting at the second runner. So, you know, you're getting a sort of a variety. I mean, as you're sort of coming down to the 1 minute mark, the money gaps are sort of tending to be a little bit fluctuating and unstable. And if we take down to the 1 minute mark, even though there's very strong clear-cut money dominance here for the top 3 runners, if you look back, you don't have that sort of continuing obvious dominance in the earlier intervals. So that's a sort of a contrasting one to the first one. That would suggest to me that even though it looks all, you know, pretty solid at the 1 minute mark, maybe on the strength of the fact that of what presented over the lead-up period, if that were the first trade of the day, it might be one that you might like to think twice about involving yourself with. And curiously enough, this one was a very, very bad loser, because I mean number 6 ended up being the winner. I think number 8 was the winner, but number 5 was the second place getter, and so on. So, you know, I'm not suggesting that in every instance, if you select something that you're really confident in, that it's going to win. But I think you would find that more often than not, you would have a successful outcome rather than a losing outcome. All right, so we move on now to Now this is just once again a banker trifecta, $1.70 favourite. As we can see, and as I keep saying over and over again, I suppose you're all sick of hearing it now, it's the win dividend value, of course, between $1.50 and $1.70 that determines or identifies a banker trifecta. Because when the win dividend falls to $1.70, we know that that runner has to be holding upwards of 50% or more of the market money, which is a sort of a very strong endorsement for that particular runner. And on the strength of that, of course, we're prepared to single the favourite out alone to come first. And covering down here to number 5 per second to satisfy the 80% component that we need, and of course bringing third place down further down to the lower money gap, that gives us 24 combinations. That shouldn't, yeah, that's right. That's better. Okay, and of course if we look over here, and I always encourage, in order to optimize your selections appropriately at the 1 minute mark, always refer to the money profile, because it will give you some guidance. And I think clearly you can see there are 3 levels of market interest here. Very strong money for the favourite. You've got that sort of secondary, clear-cut secondary support down to runner 5, and then the lower amounts down to the money gap at 2. And I stress once again that when we're applying megafecta and banker trifecta, we stick to basic selection making. We don't sort of introduce allowances into the mix, simply because, let's face it, we're making quite a big concession in singling the favourite out alone to come first. So we want to make sure that we optimise the selections for second and third to give us the best chance of picking up not only first place but also second and third as well. Okay, now we go to the next one, which was a percentage return, and of course these are the presentations in percentage return that I encourage people to certainly cut their teeth with when they're starting out. First of all, we have a strong favourite presenting with a percentage that's above 25%, and I think clearly we have those 2 runners holding more than 47.5 of the cumulative money. We have a very solid money separator in excess of 1.7 minimum. Very clear-cut cumulative money dominance here, backed up by very solid money support at the 1 minute mark, and it's evident here, 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 in fact going right back. So you've got some sort of, even back at the 3 minute mark for instance, the money dominance for those 2 runners was starting to manifest itself. And so you've got that consistency. And so this is a good example in percentage return of a solid trading opportunity. So if you're presented with something like this, first up on any given day, it's worthwhile to consider taking because it's generally it's not surprising to see that you have success. Okay, where are we now? I've lost him. Here he is. Okay. Now this was a double whammy here. I mean, we've got a trading opportunity in trifecta, which is just very simple. It's just 50, 70, 90 to red money gaps that you know, which forms the basic money gap selection process to give us 48 combinations. And then if we go to percentage return, we have a similar trading opportunity to the previous one, with strong favourite, sizable separator marking the group, cumulative percentage greater than 47.5, very clear-cut cumulative money dominance here, dominant money support at the 1 minute, dominant money here, dominant right all the way back to 3-4 minutes. So once again, another consistent, sort of consistently solid trading opportunity presenting, not just at the 1 minute mark, but in the earlier intervals as well. And so there's a race that's produced a winning opportunity in trifecta and also a winning opportunity in percentage return. Once again, another trifecta opportunity, this time covering the top 4 runners for first and second, and down to runner 6 for third. I think that pretty much accommodates the prevailing money profile. You can see this is another one where there is sort of clear-cut money support, and I think if we take this back, you can see you've got that stability in money gap location, which can sort of build confidence in the eventual trading opportunity. And another winning opportunity has presented, not surprisingly, because I mean it's very clear that the bulk of market money is being devoted to these top 4 runners. So not surprisingly, your success has come from that area of the field. And so that's a good example of why we encourage people to always prioritise from the top down, not from the bottom up, because you don't want to be giving undue importance or bestowing undue significance or importance on runners that are attracting, relatively speaking, very little market support. Another banker trifecta, as you can see, with 12 trifectas. Now I think some might think it might be prudent to continue for third place down to the lower money gap. That's an option that can be taken. I mean, when all's said and done, if you cover down to I suppose the foundation level of 90%, even though the money profile would suggest that that's the optimal coverage, I guess, given that you've only created 12 combinations, it could be argued that a little bit of extra insurance by bringing third place further down to the second bottom runner is a good move, and I guess that's an option that is quite justifiable. But I think the optimal coverage, based on the overall money dominance in this particular race, presents by bringing the second and third down to runner 8. Another percentage return, very solid percentage return, this one. As we can see, these two runners holding well in excess of half the market money, 56.33% of the market money, and of course the separated defining the group is clearly much bigger than the minimum requirement of 1.7. So here again we've got very solid money support for all the way along. So you've got that predictability that I've been alluding to today, presenting, and that predictability of the market direction, I guess, provides endorsement for the trading opportunities that present. When you've got a situation where the market sort of is in flux and doesn't seem to know quite, where success is going to come from, then in circumstances like that you've got fluctuating money gap locations in size and separator fluctuations going from interval to interval that will mirror that sort of market flux. And so they tend to be less predictable and therefore, I guess, less worthy as potential trading opportunities. There we go. Okay, there's another opportunity where we're covering the top three runners for first and top three runners for second. Top three runners holding in excess of 70% of the money. Now this time, because I guess the, as you can see, here we go again, stable money gap at the third runner. Remains consistently located right down to the 1 minute mark and pretty much hovers around much the same size. I think there's possibly a little bit of an increase as we're going along, which is always a good sign. So you can see how from 3 minutes down the money gap is building in size. So we've got a situation where the I guess the market support for those top three runners is becoming more clearly defined as we work down to the 1 minute mark. And I think we're more than justifiable in making a money gap allowance by stopping at number 8 and also making a pool concession, given that we're pretty close to the minimum requirement of $5,000, and so therefore the chances of the pool increasing exponentially beyond 1 minute are quite high. So on the strength of the stability of market support in this race and the opportunity that's presenting as a result, we're prepared to make that concession on the pool. And that gave us another trading opportunity. This one wasn't a winning opportunity, but all the indicators initially bespoke of it being quite a worthy one. Incidentally, with the pool allowance, it's discretionary. You don't have to make a pool allowance if you don't feel so inclined. You can use that as a reason to rule the race out if you're not sort of really confident in what's presenting. But it's always there to be used if it's the one impediment to having what could be a successful trade. And last but not least, yet another percentage return, trading with the top two runners. Number 5, our strong favourite. Once again, we've got these two runners holding more than slightly more than half the market money. Very large separator defining the group, which indicates that the money dominance here, the cumulative money dominance and the dominance at the 1 minute mark is just standout. And all the way along, you can see you've got that consistent sort of support for those two runners. So that is a trade that's certainly worthy of involvement, and it's a nice way to finish up the day. So on this particular day, we had a good positive start and a good positive finish. And if we go down to our, we can see that it's the kind of day that we all sort of seek to enjoy. I would suggest that even though if you persevered right through to the bitter end, I mean, or into the latter stages of the day, of course, you would enjoy a greater profitability. But hey, I mean, I would think anybody that's responsibly monitoring their progress as they go along might be thinking very seriously about exiting around about this point here.
Yeah, that's right, Pete. Hey, what time did SR2 actually run during the day? Can you just scroll up and show us what time that race ran?
Yeah, I will. Where is it?
So 1:15. So what's that? An hour and 10 minutes. So after the first race began. So really, you know, if you started the program half an hour before the first race, did your bit of scoping, and inverted commas worked for that, you know, hour. Let's call it an hour and 45 minutes because maybe I'm being generous. You know, we're talking a pretty good hourly rate there, right?
Oh, I think it's just almost up with barristers' rates, actually.
Yeah, but they have to pay tax and deal with.
They've got to do an awful lot of preparation.
Yeah, that's right. And wear a wig, which you or I might be okay with wearing wigs, but there's other people out there who might not.
I think it's mandatory, mate.
Mandatory. So from now on, all of our in-person events are going to be with us wearing those wigs.
No, but yes, if you look, take it into perspective. I mean, an hour and a half. It's a good point that you're making, Matt. You know, for an hour and a quarter of effort and responsible involvement, you walk away with that kind of return.
Pretty good. Chris is just saying that it's not the barristers he works with. Are you saying that you've got some quality ones that charge a reasonable price, Chris, or you've got ones that charge a lot more? Hey, so we don't. So Ross is just asking about threats and Chris's ideas in regards to the hiccups. Look, we don't really get into that sort of conversation in this in this forum. That's more of a Chris question, and if you do want to email Chris, you can. Obviously, he's busy and things like that. So just wanted to. So we don't want to. What we're providing here is the current basics. Now, yes, over time, Peter will introduce things like checking with the percent return to firm up your trifecta selection. Peter will bring on board various new ideas as they come through and as they've been long-term tested. What we're doing here is we're providing you with the basics. The idea is we want to make sure everybody can do these things, and Chris has just chimed in saying, this morning I am the student. So, and this is you know, if anybody's listened to Chris's webinars, you know, he's certainly got some skill there, but he's humble enough to realise and want to be here for training. Like our football analogy earlier, you know, it's about running the ball up, making sure you're match fit and going to training. You know, these guys know how to carry a ball up. Hopefully by the time they reach grand final, but they're running it up just to continue that match fitness, and that's what Chris is doing here. So so whilst I recognise your question there, Ross, there is what we've got a very clear brief What we're going to supply is information based on our current expanded guidelines as we continue to learn and grow through this. And our training has been different, or continues to evolve as the IQ Pro gets better, and as our understanding gets better, and as the racing season and racing industry changes. So what the idea is, obviously everybody wants to be on these, should be on these calls every week, simply because it's the most current information. The training was recorded, maybe about a year or so ago, so it's still pretty damn current. But it's still the point of these things, and why we publicise these widely and provide them for nothing to our customers, is because this is the most current thinking. And if you don't keep current, you won't be continuing successful. Chris has just chimed in. Doug has just chimed in saying, thanks, Matt, always a learning experience. And also Chris has just said, personally, the last 3 webinars, Peter has excelled, and I've noted several things that I can use. So thank you very much, Chris. I appreciate that. That's why we're here. That's what we're trying to do, is continue to deliver high value to everybody who takes the time on a Saturday morning, or now in New Zealand, Saturday afternoon.
Yes, I think, and I thank Chris for that. I think what I'm trying to get through to everybody is that even without having the benefit of Chris's wonderful insight, and perhaps layering the information, with that, with his information, and the way he views the program, and has done very successfully. Even without that, just employing the basic foundation selection processes, and I suppose applying a little bit of logic to your observations, not only at the 1 minute mark, but in the period leading up to the 1 minute mark, you can, you can quite confidently single out worthwhile trading opportunities that are going to produce pretty good returns. And once again, the bulk of the profitability on this day came from trifectas. So it's, I think it's a solid endorsement yet again.
Yeah, very good.
Trifecta format, and so that's very much why I always encourage new people to not waste preliminary time when they're reviewing live data. Get structured and get disciplined, and start looking at races around about at least 5 minutes out if you're looking at it from the foundation. I mean, obviously, if you're employing Chris's methods, then you're going to be looking from a lot earlier than that. But at least 5 minutes out, you can see patterns emerging that you won't necessarily see if you just fritter away the time and then start getting serious around about the 1 minute mark. Yeah, so I guess that pretty much wraps it up today, Matt.
Great. Look, thank you. So I think Chris was just saying that that the week that I wasn't available to be on the call was the beginning of Chris's new learning curve. So I think he might be saying that I might be obsolete in this, which I appreciate it. Anyway,
we need the warm-up band, Matt.
I'm like the that's right. I'm like the opening act of the grand final. It's sometimes terrible, but they still have it there. I'll get Angry Anderson to come out and do a number before the next one, Pete? He might be cheap. He might be cheap enough for us to afford these days.
Well, he'd be obsolete enough.
Yeah, that's right. Well, Brian's saying like the haka. I don't think Brian means that the haka's obsolete. That would be, as a Kiwi, that might be a bit sacrilegious. I did enjoy seeing the 1905 side do the haka. That's always a bit of humour. But anyway, I will, before I get into football, which we always do, Peter, are there any questions that anybody's got here? We've got about 40 or so people on the line. Is there anything that you guys want to ask us? This, everybody's sitting here and dutifully scribbling down notes and preparing for the day and getting ready. Love to answer any more questions. Oh yeah, so David, Pete, can you go back and have a look at the data sheet, please? David Craven's just asking if we can have a quick look at the data sheet.
Sure.
So the point that Pete was making on that is that SR1 and 2 put together almost $1,000 in an hour or so, and that's very good. And so disciplined traders would be usually out at that stage. And then the next couple we gave most of our profit back, and then we had the slow climb back up. And yes, we did eventually have more money in the bank, but the point of this exercise is to put some money in the bank, go and enjoy your lifestyle, usually. And of course, if you continue to drive the program all day, you're still making $640 something. So Lynn was just saying she'd be very happy with that, and that's the that's what we're trying to do here, Lynn. And also Lynn, Lynn, by the way, everybody, Lynn is relatively new and working closely with Leon. And once again, I do mention it often, the true value of having a local contact you can just have a quick call with, because we're as a company dealing with everybody, and it's nice to have Leon. And I just wanted to just say right now that it's amazing the support that I'm getting from people like Leon. Really, thank you very much, Leon Forgan, an amazing person. Happy to, show demonstrations of the program to potential customers, spend some time there. Happy to help new customers with the program, run a support group, and this is all unpaid. And Lynn has just said it. He's echoing my comments there. Leon is a fantastic help. So Leon, thank you very much. Also Chamath for doing a demonstration the last couple of weeks. Really appreciate it. And also Roger over in the West. Look, you guys are, and of course, people like Chris and Merv and all of these sort of guys as well. Really very much appreciate it. I feel I have a lot of gratitude, and I don't want to get all airy-fairy about it, but you guys are what make this company great, and having your support to continue to refer your friends, having your support to write us testimonials, and if anybody wants to have a look at some testimonials that have recently been written, I send out the email saying, hey, if you wouldn't mind putting a few lines together, go across and have a look at the testimonial page on our website. There's some pretty fascinating stuff that's going on there, and people have written some really great stuff. And if you're not achieving those results, well, it's behoved on you, I think that's the right word, Pete, to go ahead and jump on and make contact with the people who wrote those testimonials, make contact with Peter, make sure you've got the basics first before you contact other people. Get success. Yeah. So look, I'm pretty complete. David is saying, yep. David's just saying, hindsight is 20/20. I might have been out at SR2. Many thanks. I look at what I make versus what I put at risk. Yeah, absolutely, David. And that's we speak about financial strategy quite a lot. And if anybody is fuzzy, doesn't have a written down daily financial strategy, then call Pete. Figure it out. Figure out what you do. So what's the difference? I always look, okay, well, what's the difference between the guys absolutely crushing it, making the six figures? What are they doing compared to others? Well, you know what? It's always the same stuff. It's always having a written plan that you stick to. And if you don't have a written plan to stick to, then get one. Write something basic down and stick it on the side of your screen. What is your stop profit? What is your stop loss? What is your where are you going to? What days are you going to trade? If a milk shop, milk bar, a local dairy, as in New Zealand would call it, or a local 7-Eleven here in Australia, convenience store, if they just decided to open when they feel like it, then nobody would go there anymore, because somebody might come in to buy milk at 6 a.m. or somebody might come in to buy milk at 8 a.m. It's not unreasonable. It is unreasonable to say, oh, well, I won't open till 8 because I can sell milk at 8. If you're going to decide to be open from 6, you've got to be in business, and that's what this is. It's a business. So decide the times, and then execute on your plan. That's my little soapbox. Everybody hears it every week, but I'm going to keep saying it because you know what? Every single week, people like Chris, people like Malcolm, people like Merv execute on their plan and put money in the bank every week. Simple as that.
Yes, it's
I'm not being flippant about it. I'm being really serious. Every week they put money in the bank because they have worked out what their plan is and execute it and be disciplined about it.
That's right, and I guess whatever all of these successful people have in common is that they are masters of their own destiny, and they're in charge of the program. It's not the other way around.
Yeah.
And that's the key. It's simply a vehicle. It's a means to an end, and you're using this tool in order to achieve a positive outcome in terms of usable money that you're generating, and once you've done that to your satisfaction, then the program's done its job.
Yeah, exactly. Couple of quick questions. Dan is asking, could you put the day's return back up again? So Pete, can you just click on the data sheet? And Linda's asking where are the testimonials hidden. We've got the website set up that if you've logged into the members section, it takes you directly there to try to shortcut the number of clicks you have to do. If you want to view the testimonials, you need to just go ahead and click log out. Of course, the details will be remembered if you've asked the computer to actually remember the details. So just log out of the members section and click on the testimonials tab across the top of the screen. No problems, Linda. Linda said thanks. All right, guys. Well, it's 10:48 or whatever time it is in your neck of the woods. It's my son's 7th birthday today, so I'm off to Monster Trucks this afternoon. So I'm going to go get my redneck on. All right. Well, look. If there's no more questions, comments, thoughts, I will sign off. Pete, any final words of wisdom?
No. I think it's been all said today, and once again, I hope that some benefit has been derived from what's been discussed, and I think we'll look forward to having the benefit of your wonderful company in a fortnight's time. So.
Perfect.
Good. So I'll just say goodbye to everybody and have a great weekend.
Thanks, everybody, and may your team win. As long as it's the
absolutely.
Wallabies and well, I guess somebody from Queensland is going to win the NRL Grand Final. So I get what happens. I guess is it got so boring beating New South Wales. We thought, well, bugger, we'll just play against each other from now on.
Exactly.
So
we just use their venue.
Yeah, we'll just use the venue. Anyway, thank you, everybody, and I'll see you in a couple of weeks. Bye for now.
See you then. Bye now.